We're now going to talk about monetary policy and financial policy. These are both ways to affect the economy in a country, to affect the state of the market. Monetary policy is carried out by the central bank in Sweden called Riksbanken. Riksbanken is using something called the repo rate. This is the interest on loans and deposits that banks that exist in Sweden have to pay if they want to take a loan from the central bank, or the interest that they will get if they deposit their money into the central bank. If the central bank will make the repo rate higher, this means that it will be more expensive for the banks to take a loan. Therefore, they will not do that as much. Therefore, there will be less money in society. And you all know now that if we have less money in society, people will not be able to buy as many things as they normally did, and therefore the economy will cool off a bit. On the other hand, if the central bank will lower the repo rate, there will be more money in society. This is because the banks can now take out money, take a loan from the central bank, and they can give that money as loans to people. People can therefore buy the new car or the new house that they want, and more money will be out in the system. If we have more money, we have a chance of more people buying things. But we also have another thing happening here. If we have a lot of money, people are buying a lot of things, there is a risk of inflation. We don't want too much inflation. We have talked about that before. So by using this repo rate, the central bank will make sure that we have just about enough money in our economic flow so that we do not get too much of inflation. We want an inflation to be about 2%. It cannot be exactly 2%, but it shouldn't be much far away from the goal of 2%. So if the rate goes up, we will have less money in our society. It cools off the economy a bit. If it's decreasing, then we will have more money and we will have a chance of more people buying more stuff, and that will probably make the economy be a little bit better. So that was the monetary policy. Now we talk about the financial policy. This one is carried out by Finansdepartementet in Sweden. The head of this governmental department is the Minister for Finance. And financial policy means that the government will use its budget. It will use its budget to work against the changes in the state of the market. The budget will then use taxes and, as we've been talking about, allowances. If we increase the taxes, then people will not have as much money to buy services and products for. That will cool off the economy a bit. If the taxes are lower, we will have more money in our pocket and therefore we can buy more stuff. The government will use this when the times are bad and they want times to be better. They will lower the taxes a bit. With the allowances, if they are increased, we will get more money in our pocket, times will be better. If they are decreased, we will have less money and therefore the economy will cool off a bit. It would be easy if it is as simple as I've explained it here, that simply by using the repo rate, the central bank will directly affect the economy, or that the Ministry of Finance will affect the total economy of Sweden simply by, well, giving us a little bit more allowance for the children that we have, or that we have to pay a little bit less tax. It is not this simple. But this is a basic idea. The central bank will use a monetary policy, and the Ministry of Finance and the government will use the financial policy to affect the state of the market in our country.